Now, for our Halloween version of Traders Unplugged, a couple of traders who never fear the market, Alan Knuckman and James Ramelli, join us from CME Group. Good morning, guys.
Good morning.
Let's go with round number one. Credit due. Extremely low interest rates set by the Fed are all the talk, but who should get credit for rescuing the financial system?
You've got to understand the fundamentals are fantastic. There's nothing that hasn't improved over the last few years, and it is bothersome to me that the administration and this group of folks is not getting any credit, and if you listen to the politics, you would think the market has crashed and everybody is suffering.
Right. Well, I think the answer to the question really depends on who you are in this world. Those who were shaken out in 2008 never really recovered like those that were in the 1% and had the staying power to stay in markets.
But that's their fault that they were afraid and they didn't see an opportunity and they just stayed away.
Right. The low rates are great if you can get the capital to invest them, but if you're in the lower part of income earners in the U.S., you never had that access in the first place.
Round two, contagion raging. Some say Europe is on the verge of recession. What stocks would you play that have euro exposure? Coke, Priceline, or McDonald's?
McDonald's has quite a bit of exposure in Europe. 40% of their net revenues come out of the EU. Now, the problem is if the European economy tanks,
McCheese?
Not good for McDonald's. I'm looking at this one as a short setup here. It came from 104 down to 89. It has gotten a little bit of a bounce back to 93, but I think this is a good place to start selling more McDonald's. The main reason I'm looking to go short is even if the EU does not collapse and their monetary policy helps fix that economy, sales in the U.S. are struggling for McDonald's.
Yeah, they've got some issues, but I think it's more of a buy than a sell at these levels. But there's a couple of others. Molson Canadian, they 50% of their revenues come from Europe. But I'm actually looking at this from a risk-reward standpoint, looking at EWG, which is the German ETF. We're sitting around 27 now, 25 is low. That has disconnected from the S&P.
Round three, oil's not well. What does oil below $80 per barrel mean to your trading?
Well, it means it's a tax cut for the consumer, so the consumer may get back into the game. But what's interesting about this, I was looking at the numbers from the shorts in the futures markets. They've been covering their positions in a very, very quick fashion here in the last week. So that may be the sign of a bottom here in the near term. But that's more good news that people aren't enjoying.
Right, absolutely. Now, I think that maybe we are getting ready to put a bottom in at all. I don't think it's going to happen until we get to 75. Alan's point about a tax break for the consumer here, yeah, that's a really good thing for them. But if we don't see that come through, especially as we get through earnings for retails and the holidays, we're not going to see
when was the last time you paid less than $3 for gas?
On to the bonus round question for today, a Halloween ticker time. Which of the following ticker symbols is a fake? Is it A, boo, B-O-O, B, ghost, G-H-S-T, C, mask, M-A-S-K-X, or D, trick, T-R-C-K?
I'm going to have to say trick.
Yeah, I think it's none of the above. I think she's trying to trick us.
Well, the answer is trick. We love to trick you because you're such great sports. Thanks for coming on the show. First Business continues right after this.
Thank you.